Okay, so Bitcoin has showed its hand a little bit, and it's an interesting one. So our hypothesis, that was our dominant hypothesis, that it was more likely to be the downside. We had modeled also for the potential for upside, and it's made that target already. So interesting, really low volatility squeeze, and as I say, we continue to buy it to the short side until such time as we start to get failures. So we were inaccurate here in the direction, quite clearly, but for those that'll jump on and go, you were wrong, I don't play that game. It's a probability assessment. Over here we were accurate, over here we were accurate, over here again we were accurate on the way down. And when we started seeing these falling wedges fail back down to new lows, it was repeated again and again. And there was structure again on the inverted side here in these micro points. So generally the bias has been consistently to the downside, but we are near the all-time low. So there was slightly higher risk, and this up leg was more buoyant than this long period of grinding down. So what's actually happening is there is a reduction in the overall extremity of the volatility. The question is, have you got a floor? Now, the worry the bulls have is, as I point out, I'm neither bear nor bull, and this development showing a degree of floor under here probably actually in terms of the long run trend doesn't change all that much. Just for a bit of context, and I might have a better version elsewhere, so let's just see. The chart's real busy, so I might take off some lines for you, but I think actually got a better option one for you elsewhere. There we go. Let's have a look at this. Over here, again, lots of work. This single candle does not a full summer make either. What you could have, note the red lines that I've drawn here, is that we've had this highly expansionary up move, we've had the spills, and then the grind backs up, and then further spills bouncing off the midpoint line, then right below it, and then seems to be a kind of a base low here in and around the 6,750 levels there. And of course there, because we just probed through that for our extreme low. So what can happen if this is a break of what would traditionally be known in normal technical analysis as a descending triangle, which has a flat bottom? I've kind of treated it more as a unique falling wedge, hence why I've split it here. From the point it properly went parabolic. It was strong here, but then it just went absolutely doolally. In terms of rate, you can notice how the acceleration came in that. So you've got the extreme volatility to the upside, then you had the spill that took you to the extreme volatility to the downside, and all this has just been the aftershocks. Now, for the concern for the bulls is that we get a decent rally, for example, somewhere around here, maybe 9.5, who knows, you get a RH2, but you sell again. It's not a binary event to go when you're in this phase. And I said this is one of the most frustrating periods to trade, and this is where people should generally play defense, because everything is broadly rather confusing. There is an interim state. If we rally here, short-term wise, the bulls will feel rewarded. Remember also that when you break a falling wedge, you can get a return move, or a descending triangle for that matter. You can get a return move. You may even be getting it already. Note that there's quite a bit of rejection at the 8,000 and you're back into the zone. So you could get a return move first of all. So it's follow through. I also saw some tweets that were saying, wow, this is the biggest volume since Bitcoin ever existed. Certainly not on Poloniex and on Bitfinex. It wasn't. This volume is higher than what has gone before. You normally get an expansion of volatility and volume together when you have an extreme low volatility period, and that has happened, but it's far from unprecedented. In fact, the volume here was higher, and there in the sell-offs on Poloniex and in Bitfinex, I think you have different volume data, but you had very high volume on the bottom here. So it may be specific to a particular exchange, which is another reason why you should have a look across multiple platforms in terms of your take and view. So what do we do here? What you should do, in my opinion, is you should avoid losing money, which may be one of a few things. It could mean staying in fiat and playing good defense, but not trading to the short side nor the long side, and wait and see. What could happen is this could fizzle and be exhausting, Or you get a return move, but then you get a second stage squeeze. We were at record shorts. You can't ignore that fact, and that could mean a lot of people had to suddenly panic buy for the first time. They might have been making good money on the south side. So you might get a push up, return move, and then a rally. But I would be very cautious. My suspicion is that a rally could get us up to these levels, even these levels, but that it could make a second impulse and you could get set up for an inversion, an inverted setup. In other words, we get a breakout of the triangle, but it doesn't turn into a new bull market. The viability of the new bull market would be very much dependent on the impulsive and strength nature of the move here. If we get a very violent and strong impulsive move, and that would require it to be stronger than that, more like that selling, that kind of gradient, up to this cluster of levels, and these are key levels. We've had it time and time come again, and we've been resisted time and time there. If we get a violently strong move, quite steep, steeper than this descent, as I say, that descent and that descent, similar to this ascent, for example, that would be a nice move up to there. Then you get what's called the W bottom, aka close to a double bottom, where you eventually hollowed out here and rounded bottomed here, which is not far away from the V bottom of the high volatility period, which is natural to have a V bottom, V-shaped bottom up here. But we need to see impulsiveness on the way back out. If it is moderately strong but takes its time and gets here, I would suggest there's possibility then for another sell-off move. Or it could be moderately strong, sit up here, and then we have to watch what it does next. If it sets up an upside continuation, you could get strong for the upside from there and then be impulsive. So it's a little bit of a number of scenarios now exist, and there's no clear knowing what's going to come next. So you have to see the footprints it puts in the sand. For the bulls, you want a strong impulsive move back up to these levels. Then you can take a little dip down and you'll have a perfect setup for an inverted head and shoulders. You could argue that's a left shoulder. This is all a double bottomed head. If you get a nice line up to here, you maybe stick a nose through it, in fact, and then you sell off a little bit. You'll have a right shoulder to match that left shoulder, and you'll have a double bottom W head, which will be a pretty decent setup and will have nice geometry. You would then, you'd then be looking at around 6,750, I would call it, all the way up to 11.5. Let's say it's $5,000. You'll have $5,000 to take you back up to 16,000, and that would be a key resistance point, because I was on a very effective inverted, as was that. You'd need to be on the smaller time frames to know that. But that would get you back here, and that would give us a great first impulse and then a huge macro second impulse. This would be happy days for cryptos generally, and I'm all good for that, I have to say, because that would give an awesome future geometry for upside HVF. If you're from 19.9 down to 6, that would give a 13,000 geometry to be projected somewhere from around here, the midpoint, depending if it is symmetrical or whether it's high slung, and that could give 13,000 on to something around 14,000, will take you up to 27,000 Bitcoin. That would be your most bull events. And let me just draw that line again for you. Well, let's take a picture and just draw some scribbles. So we've actually got quite a bit in terms of scenario, but we have to watch how it plays out. I'm going to change that. This is the bull scenario, so let's make it green. You would do that. You would have a small dip down like that, and then you would do that, and then you'd have, as we have here by this purple line, a left shoulder, W head, and a right shoulder, and you'd have a nice neckline to project up, which could see you up here. The bear scenario, or the moderate scenario, which is indeterminate, is this very slow grind up. This keeps you guessing a lot longer. So if you're in it, it's okay, you're making some money, but it's not spectacular, and you're gaining a little bit, giving back a little bit, gaining a little bit, giving back a little bit. That's after, let's say, a return move. So you've had an up and then a down, and then you grind up to around these levels. What you could then have is you could either have bearishness, sell off really steep, and we have had steep sell-offs, the volatility returns, weak grind again, and then spill. And we would call that an inverted head and shoulder, an inverted HVF structure, which would then be a final attack low. People often call the death of trends too soon. You could see how people might have called the death of the bullish side over here too soon. And you traded right down at there. And everyone said, oh, Bitcoin's going to collapse at $5,000. It did collapse, but collapsing from 20,000 instead of 5,000, it's a totally different game. So you would have been killed 100 times over on any shorts you took, and there was a lot that happened here. You could see the volume was big. And so it's the same applies for the bear market. I'm not being a bear. I don't want to be a bear. I want to see crypto shine. In fact, most people make their money on the bull side. But learning to recognize bears and actually making money in bear markets is very useful skill, and it makes for the complete trader. And what would be the bearish side? That you get a return move back in and you return back down here, and you start winding up. So I'm going to do that in pink because we've already got a lot of red lines around the place, and that would be something like that. I'll make it not dashed because there's a lot going on here. Something like that, back down, and then another week thing, and then again low volatility, only this time you spill to the south side. So there might have been a little bit, as I say, a short squeeze, and then that could be pushed back down. So we'll have to see the follow through here. For a lot of people that are seeing green candles for the first time, it's like, yay, it's summer, out with all the winter woolies and all of that. Just be a little bit careful and circumspect. This is one of the reasons why I'm showing you this daily time frame view. That one day we've had a bigger day there, a bigger day there, a bigger day there on the upside, a bigger day there that was held on the upside, a bigger day there in terms of candle body size that was held on the upside, a bigger day there, and a bigger day there. And if you took the wick into account here, an equal size day, but it's a smaller candle body. So you've had 5 or 6 of these, all in an environment where you ended up lower later on, aka down here, for quite a while. You know, we've been sitting here. This is a number of days that you've been sitting basing out over here. And a lot of these candles occurred in here and in those rallies. So just be cautious, and also note that there has been a bit of a sell-off. It would have been ideal if this had just been a ripper, if it had been a clear ripper and maybe gone all the way to 9,000 and then had a very gradual grinding sell-off. That would be very bullish, and I'd be looking at this dark green scenario as being dominant. This one looks like the orange scenario, which could do anything, not just be bearish. It could take a while to get bullish. It could do this and then sell off a little bit, not do anything any great, and then calmly start setting up a continuation pattern, and then suddenly the tune changes and the next impulse is up. So on our middle of the road scenario, it doesn't have to sell off. It's a bit of what I call, it's unclear. It's unclear. It keeps us all guessing for a while. So the question then becomes, do I just, if it's not the pink scenario, do I just go long anyway and make little bits of money maybe, or maybe lots of money quickly? Because that, you know, there's 2 scenarios there, and what if it does this? Well, your problem is if it suddenly sells off like that, you see, and it's sudden, the sells come in suddenly, and then you get caught out. So I would say you should actively pursue defense generally and retain your capital. There are some signs of stirrings. There were some signs of structures that could have been down that actually broke up. So there has been some progress, but a rally here, a rally can go on for quite a while and still be part of the bear market, and we could still trade down to $2,500 on Bitcoin. It's not an impossibility, you know, this projection here, this geometry could be projected from anywhere from the 8.5 levels, and it'll take you a long way down. So everything remains possible now. Everything remains possible, but short time frame, the twitch has been to the upside, which was not what we expected, because we always continually assume a continuation. But don't get too excited. Don't get too excited, albeit a first squeeze in a new trend and a bit of shorts maybe squeezed out. But if it is to continue, we should start to see the dark green line. Okay, that's my take on Bitcoin for now.